Nvidia just reported their latest earnings report. It's the big one. It's the one that everyone has been waiting for because of all the talks about AI. Is it real or is it just hype? Well, Nvidia with a triple beat, meaning beat on EPS, revenue, and even on Q1 guidance. Now, at the time of making this video, the stock is now up 3.78%. The stock was actually down 4% just before, and it's actually now up 4%. So the market reacting quite positively to this report. We're going to cover the earnings call right after this video. Now again, Nvidia, not cheap. If you look at valuation, the next 12 months, PE over 32 times, EV to sales over 18 times. So not cheap, but for a company that is growing as fast as them. I mean, if you look at the analyst estimates for the coming fiscal years, growth here is, well, unmatched in my opinion. Still not cheap, but we are in unprecedented times. Some say you might compare to the dot-com bubble with the internet companies. I think with AI, things are going to go even higher, faster, and become even bigger. Of course, might be completely wrong. You can share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe. If not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So I start here with a couple of comments from Jensen Huang. So accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations. This is very important because usually you have companies that deal with other companies. In this case, Nvidia is dealing with basically everyone. Nations, industries, companies, especially nations. We've talked a little bit about sovereign AI. It's going to be a money-making business. Then, our data center platform is powered by increasingly diverse drivers, demand for data processing, training, and inference from large cloud service providers and GPU specialized ones, as well as from enterprise software and consumer internet companies. Vertical industries led by auto, financial services, and healthcare are now at multi-billion-dollar level. And this is just the start. As for Nvidia RTX, they introduced that less than 6 years ago, is now a massive PC platform for generative AI enjoyed by 100 million gamers and creators, myself included. The year ahead will bring major new product cycles with exceptional innovations to help propel our industry forward. There's going to be a GTC event next month. We're probably going to cover that on the channel as well. Now, with Nvidia, as I said before, yes, this is predominantly a hardware company, or at least it started predominantly as a hardware company. But the hardware company doesn't have gross margins of 76%. So how did it reach that? Well, it reached that thanks to the software side of things. We've talked about that in the preparation video, right? CUDA, specialized customizable SDKs, Omniverse. Put all of that together and you get something like Nvidia. Now, I've seen some comparisons already for Nvidia and Apple's ecosystem, right? Apple sells iPhones, devices, hardware, but it makes a lot more money through its services, through the App Store, to all the apps that are being built, the payments that go through, advertising right now. Same could be said here with Nvidia. Yes, it says hardware, but all of the training, all of the libraries, it's software. All of that is software that is built in the Nvidia ecosystem. That's the real power here. Now moving on to the actual numbers on a GAAP basis here. Revenue for the quarter, $22.1 billion. Expectations were around $20 billion. That's up 22% quarter over quarter and 265% year over year. Gross margin also beat, by the way, 76% for the quarter, up 2 percentage points quarter over quarter, 12.7 percentage points year over year. Operating expenses only up 6% quarter over quarter, up 23% year over year. That's normal. Operating income is up 31% quarter over quarter and almost 1,000% year over year, reaching $13.61 billion. Bit of the same for net income. Diluted earnings per share, $4.93. That's basically the same here as net income. Then if we look at the different segments here, so of course the largest one being compute and networking, for this quarter $17.89 billion, up 22% quarter over quarter and 387% year over year. The big push here coming from a data center. As for the graphics side, that reached $4.2 billion, up 21% quarter over quarter and 77% year over year. Now, we knew this already, that the gaming segment will not really be contributing that much. This quarter, they projected that as well because of the weakness. So gaming quarter over quarter did not grow. Year over year, it's up 56%. But again, look at data center. They added another $4 billion quarter over quarter. Remember, Q4 fiscal year 2023, the whole quarter, they barely did $4 billion in a quarter. Now they're adding $4 billion on top of what they already have each and every quarter. Truly amazing, up 27% quarter over quarter, 409% year over year. As for professional visualization, yes, we're seeing it's a bit going up quarter over quarter, not by much. 11% here. I still expect this segment to be quite big in the future. It is up 105% year over year, but overall still quite small. Automotive grew 8% quarter over quarter, down 4% year over year. We're going to see in a second why. Then moving on to fiscal year 24 compared to 23. This is the full picture, of course. I mean, it's a big transformation of a company. Remember when Nvidia had that little slump, people were extremely bearish. Things weren't going their way. I remember this sentiment from 2018 after the first big crypto bull cycle. It crashed. Fine, the business itself was also going down, right? Revenue was not increasing as much. Actually, it was going down quarter after quarter. So fine, the market has reacted to that. But right now, the story has completely switched. And this is my point with this, let's say, not really Internet 2.0. It's AI. It's something very, very different. It's not like the dot-com bubble. I know a lot of people like to compare it because, well, we like to compare to things that we're already familiar with. It's easier to understand. But in my opinion here, yes, there are a lot of companies, let's say, that are riding the AI hype wave. That makes no sense. But there are certainly some companies that are making and will be making a lot more money in the future because they have something already right now that is generating billions and billions. And so this is why we have seen this V-shaped recovery and then some for a company like Nvidia. Now, with regards to automotive revenue being down 4% from a year ago, they say here also that fiscal year revenue was up 21% year over year. The sequential increase was primarily driven by self-driving platform. The year-on-year decrease for the quarter was driven by AI cockpit, offset by an increase in self-driving platforms. The year-on-year increase for the fiscal year primarily reflected growth in self-driving platform. And if you believe that this is the future, then of course this segment is still quite small compared to the potential endgame. Then moving on to balance sheet and cash flow. Truly remarkable. Cash and cash equivalents and marketable securities were $26 billion, up from $13.3 billion a year ago and $18.3 billion a quarter ago, basically adding $8 billion here quarter over quarter. As for cash flow from operating activities for the fourth quarter, that was $11.5 billion, up from $2.2 billion a year ago and $7.3 billion a quarter ago. Fiscal year cash flow from operating activities was $28.1 billion, up from $5.6 billion a year ago. Again, it's night and day. And then last couple of things here before we look at the outlook. So in the fourth quarter, they utilized cash of $2.8 billion towards shareholder returns, including $2.7 billion in share repurchases and $99 million in cash dividends. Yes, they're buying their shares no matter what the price. Then, with regards to first quarter outlook, revenue is expected to be $24 billion, with GAAP and non-GAAP gross margin expected to be 76.3% and 77% respectively. Yes, this means that quarter over quarter, it will not grow as fast as before, but year over year, you'll see crazy comparisons as we've seen in the preview video. Still, if you normalize this for a year, basically do this times 4, you get $96 billion for fiscal year 2025, which if we look at the estimates from analysts for next quarter, they estimated revenue to be $22 billion. So Nvidia coming in here with $24 billion is quite a nice beat. And of course, this would mean that over the year, the estimates will change probably on the upside as well. Right now, stock is up 5.72%. If we look at the quarterly trend, well, you can pause the screen and look at those numbers, compare the fiscal year 2024 to fiscal year 2023, again, night and day. And so last thing here is the graph. This is on the daily. On the daily, we are not overbought anymore. Has been a couple of days of red. The stock actually rebounded on the 20-day moving average. We're now back over $700 at the time of making this video. Of course, a lot can change during the earnings call. A lot more information will come out, but seeing that rebound here during the day over the 20-day moving average, again, shows the strength here in that stock and in that company. Since it is earnings season, a lot of things could have changed, but I mean, did you really expect Nvidia to miss their own guidance? Probably not. So there you have it, another flawless quarter by Nvidia. Whether or not you can get it for cheap in the coming days, who knows? Join me in the earnings call in just a bit. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.